Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. I said yesterday, there's a lot of complex forces going on here. In fact, yesterday was the result of some of those. An immediate countering bearish engulfing pattern after the previous session's bullish harami. This is the continuing follow-on to the recent 3-day bearish evening star pattern made last week. We now have the medium moving average currently at 120.48 as overhead resistance, as well as the short moving average currently 120.27. That ties up with some light congestion from 2 weeks ago in the 120.30 to 35 area. Below, we now have the recent 50% Fibonacci line at 119.75 plus its two partners. Short medium moving average currently at 119.61 and the long moving average currently 119.47. Today I've drawn my first bearish Andrews pitchfork here in quite a while. It is for the late February to late April action, and it seems to suit the bearish angle of attack right now. So far today, a further move lower towards the recent 50% Fibonacci line plus the short medium moving average and the long moving average. Cable, aka sterling against the US dollar. A hanging man pattern yesterday. These are interesting patterns as traditionally they are seen as bearish reversals, yet the data indicates they perform as bullish continuation patterns in something like 6 out of 10 times. It'll be interesting to see if the market follows tradition or the data. The market is still close to the lower time, currently at 137.67 of the June to September 2020 bullish shift pitchfork, and its partner, the medium moving average, currently at 137.77. Please remember this pitchfork was given a bullish angle of attack of this market since September last year, and has also been partnered by the medium moving average throughout all that time. Overhead, we still have the significant resistance at 139.99. This 139.99 level has rebuffed 5 earlier attempts higher since late February, and even that attempt back in late February was turned around after a week. So it's important to pay close attention to it and the resistance levels beyond at 140.75, 141.43 and the March 2018 high at 142.43. We also have the double bottom formed since mid-March. A preliminary target for the double bottom, target X, is in the 142.45 area, the same areas as the March 2018 and February 2020 highs, whilst the full target X1 is in the 143.30 area. So overall, we're still well within the June to September 2020 bullish shift pitchfork. So far today, nothing. A little higher, but then back down towards yesterday's close. Euro sterling. Okay, despite the monthly key reversal up last month, yesterday validated with a second consecutive close below the ascending triangle as a bearish breakout lower. We may still see a pullback up, but it's time to start looking at targets below. Hence, target X, an initial potential target below, is in the 85.90 area. Well, it's not much of a move from where we are, but that is the nature of breakouts lower in ascending triangles. What will become interesting is if the move lower carries on and the ascending triangle morphs into a possible double top. We shall see. So far today, a further move lower, with prices approaching the short medium moving average currently at 86.19. Watch this space. US dollar against the Indian rupee. An inverted hammer pattern yesterday as prices shied away from the combined support below of the 50% Fibonacci line of September 2019 to April 2020 move at 73.67 and the flatlining long moving average currently at 73.63. Additionally, the short medium moving average currently 73.55 is moving up to help. The inverted hammer is an interesting pattern. It's traditionally seen as a bullish reversal pattern The data shows that almost 7 out of 10 times it acts as a bearish continuation pattern. The question now is whether the market will follow tradition or the data. We still have below target X an initial potential target X1 for the double top. After target X, an initial potential target X1 for the double top. That's in the 73.45 area, with a full potential target X2 in the 73 even area. So far today? Well, it looks like it might be following the data, as we see a small dip lower to start, but then a rejection of the bearish intent, what looks right now like an immediate countering key reversal up. It's all very interesting. US dollar against the Brazilian real. A second indecisive spinning top yesterday. This time the market punched up through the overhead resistance combination of the recent 50% Fibonacci line at 544.41, the medium moving average currently 546.61, and the long moving average currently 544.97, but still fell back. The initial attempt higher was the further outcome of last week's 3-day bullish morning doji star pattern. Yet all this bullishness has still been held down on a closing basis. It seems the market was happy to recently reach the initial target X on the downside for the recent sideways triangle, but reluctant to move any further down towards target X1, a possible full target for the sideways triangle at 513.80. I suspected yesterday that may be too much of an ask to try and get down there, and I may retire them soon. But we have some interesting overhead resistance currently capping the market. Beyond on the upside, look to the Fibonacci congestion area 552.90 to 554.70. US dollar against the Mexican peso. An interesting day yesterday. It was an indecisive spinning top, but also an outside day. I guess just adding more to the indecision. The market was capped on top by the lesser recent 61.8% Fibonacci line at 20.3382. A surprising feat of resistance, I think, and supported below by the Head and Shoulders neckline, currently at 20.1216. Interesting, the medium moving average, currently at 20.2217, seemed only to play a role on a closing basis. It is increasingly likely that the market will not attempt to reach targets X1 to X4 below, the targets of the recent Head and Shoulders top patterns, and at least one, the late February to early April Head and Shoulders pattern, may indeed be a continuation pattern. In the background there is still the possibility of a larger double bottom pattern formed since November of last year. So far today, small move up to the medium moving average and not much more right now. Topside, beyond the lesser Fibonacci levels, we have the flatlining short medium moving average currently at 20.4169. Meanwhile below we have a congestion area between roughly 2010 even down to 1980 even, dating from December 2020 and January this year. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.